We're joined now by Natalie Berg from Planet Retail. Thanks so much for joining us. Let's look at the UK market first. It's been pretty tough times for Tesco, but they've had a respectable go at the market this half year, haven't they?
They have, and I think it is important to bear in mind that it is an extremely subdued market. It's difficult for any retailer to achieve growth in this market, and especially Tesco, because they already have a third share of the food retail sector here. But they have faced some challenges, particularly in the non-food sector, which accounts for around a quarter of their sales. And this is really an area where people are just cutting back. It's seen as discretionary and people aren't buying.
Yeah, somebody described it, one consumer described it today as going upstairs. A lot of the Tesco stores have their food on one floor and the other goods on the other floor. And I suppose it's pretty easy not to go and buy clothes or DVDs or electrical goods, and Tesco's that made up quite a large percentage of their sales and indeed their growth.
Absolutely, and what we're seeing too is that it's really the bigger ticket items, electricals, entertainment, to a certain degree clothing, where consumers are just cutting back. But even if we look at Tesco's food business, although it is growing, they have some challenges ahead. And if you consider that across the entire food retail sector, volumes are actually down, and this is really unusual because although people cut back on those non-food items, they're actually cutting back on their groceries, and this is despite the fact that there are a record number of promotions out there in the supermarket. So it's just a sign of how fragile consumers are feeling.
Indeed, and we're coming up to Christmas. We're already in the run-up to it, I suppose, in October. This doesn't bode well for Tesco, does it, if people are cutting back both on discretionary spending and maybe some of the more luxurious food items as well?
Definitely. I think they'll be looking to really turn around their non-food ranges because they need to capitalize on those increasingly rare occasions when consumers have an incentive to come out and spend. And premium foods as well. We'll see a lot more of that in the run-up to Christmas.
The Sainsbury's smaller, maybe a little bit more agile, and it's done pretty well, hasn't it? It
has, and like you said, it is smaller, so we can't fully compare Sainsbury's to Tesco in that regard. Their non-food is a much smaller percentage of the overall business, roughly 15% of sales, so they're less dependent on that discretionary spend. But also, it's important to bear in mind here, Sainsbury's has done very well about making the offer about more than just price. So whereas Tesco is really shouting out bargains, discount price, Sainsbury's is also promoting quality foods, luxury items, because at the end of the day, some consumers are still looking to treat themselves.
Particularly if they're not going out.
Exactly.
If we look at where Tesco's did do very well on the international front, and other major supermarkets have struggled there. If we compare, say, Carrefour to Tesco's is doing pretty well internationally, isn't it?
They are, absolutely. And Asia is a real key growth market for Tesco. We saw a slowdown in growth in China over the past few months, but longer term, China will be a key market for both Tesco and Carrefour. The market is expected to overtake the US as the world's largest retail market within the next few years. So it's really a key area for both Tesco, Carrefour, as well as Walmart and Metro and the other big grocers.
And Tesco's pretty well positioned there.
Absolutely.
Okay, Natalie Berg from Planet Retail, thank you so much for coming in to crunch over those figures with us. Thank you.